Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on on the gold market. So on the intraday chart yesterday, we also see some volatility based on and due to Janet Yellen's speech and concerning the default, technical default that could come as soon as in June. So actually we talked about this a couple of weeks ago in the gold report, just because of the poor tax collection currently in the United States, big spending on support of the banking sector. Fed is and then actually US Treasury wash out liquidity very fast, which leaves very small part to support government spending through the current spendings, actually through the month by month through the year. So from that standpoint, well, actually not only we speak about this, but also Goldman Sachs warned about this moment as well. So anyway, yesterday we have seen the big volatility on the market, and here I would say that situation mostly comes to some psychological trading moment. So because everybody knows about the possible default, at the same time as it was previously, and as actually market society tells, so they have raised and built so lots of sales that the foundation it's already is cracking. So and it's actually so. It actually seems truth. So the situation on the gold market mostly is turning to the way of the psychological trading. It's because everybody knows about this debt sale, and it may be rationally or rationally indirectly, gold is absorbing these risks inside and making some pricing in of this debt, if even nobody will actually acknowledge this clearly. It means that once the problem around debt sale will be somehow resolved, I mean any solution without default, gold maybe in some moment, maybe in very short-term perspective, it's a very short-term period, within maybe just few hours and within a few sessions, could show the significant drop. It's just because traders who will take the position on insurance against the possible default have to close the position. Conversely, if some default will be taken in some way, that could lead to the really explosion here on the gold immediately. So market will show very fast and strong upward action. And from that standpoint, in this situation, it makes probably sense to consider position taking not inside of the consolidation, but at the points outside of the consolidation. If you will take a look at the 4-time frame chart, you could see that market actually is forming kind of the pennant. From the classical point of view, this is bearish pennant. It's just because market is forming after collapse, and the triangle consolidation after collapse always considered as a continuation pattern. So it means that from the technical point of view, downward action is more reasonable. Besides, as we already mentioned previously, we have uncompleted bearish patterns that still needs to complete its targets, at least around 1950. It's minimum target. But since here is involving some greater risk, some political risk, the debt default, something of that sort, although the chance for that maybe is not really significant, we think that maybe it makes sense to consider, for example, taking the short position using stop order, not the limit order, but the stop order in the moment of the breakout of these lows. So for instance, using the stop sell around 1971, 1972, somewhere in this area. So market in the moment of the coming back to this low, starting breaking up, you taking the short position, and if market will collapse, you have the good chances to get the result. The same story is about breakout to the upside. Somewhere around 2010 area, you could use stop buy limit order. Because besides, both orders are not mutually exclusive. You could use them both, because stop order executed only in the moment when the price touch it. So if, for example, you get the downward breakout, you then cancel your buy order, and the same story with the opposite direction. If you still decide to not use the stop orders and would like to buy inside of the consolidation, here you could see that market keeps door open for the both directions. It always happens when you deal with a triangle. Recall our butterfly that we talked about here inside, right? It keeps potential for the downward breakout. Might be left wing, right wing here, right? The same story could suggest for a possible upper breakout. That might be left wing, right? That might be right wing to the upside breakout. From that standpoint, if you would like to take position inside of it, you have to take the position as close to the previous lows as possible if you're watching on the bullish side. So for example, you're buying here, placing stop below these lows and sit on the hands. You simultaneously could use the stop buy order as well. When the market will accelerate out of your control very fast, you're automatically taking additional position and market just moving higher. The same story for the bears. If you'd like to take a short position, you could combine using stop sell, or inside of the consolidation you need to wait bounce up to the opposite border with the stops above this area, taking the short position and watch what will happen. Because currently this is a bit more than the pure technical performance, because gold market is such an asset that has a relation to the big political issues that we have here. Political, some issues like the possible default or something. This is now coming the probability game. Everybody understands that previously United States always rising the sale of the debt, but at the same time, due to the big confrontation among the domestic political elites inside of the United States, Republicans, Democrats, that story might go on a different way this time. Maybe everything will be finished by the default, but some problems and technical default within the few sessions, weeks maybe, could be still shown. So there's lots of uncertainty around it, and everything and this uncertainty now is reflecting in the price performance. So that's our comments on the gold.